Right then, I'm going to do a video here. We're in Asia at the moment, Monday Asia, start of a new week. A pretty fully packed week in terms of the calendar. But the purpose of this video it's going to be potentially, I don't know, maybe 40 minutes, where I'm basically going to run through um, the major stuff that we look at, and I'm basically going to do sort of a top-down analysis across the board. So for those that don't want to sit through all of that and rather just cut to the chase, scroll to the end of this video and you'll see the bias for each pair for Monday. Um, Monday being the opening balance of the week. So um, usually nothing too dramatic on a Monday, but that's not to say that we're not going to see some trading opportunities, or indeed that the market could actually give us um, some runners. Um, but as I said, the purpose of this video is for those that want to sit through um, and see how I go through the market, multi-time frame analysis, top-down analysis, and how I get from point A to B and drawing a conclusion and a bias for the day ahead. Now I'm using Asia, London to set me up for the US, and I'm also counting back into last week, looking at last week's closing prices, how the week ended, how the week um, set up, and to give me some foundation to base my thesis on for the day ahead. So we'll start with what's coming up. We've got the FOMC, which is going to be the major highlight on the 20th of September. Then we've got Canadian CPI before then on the 19th, and we've got Bank of Canada communications both on the 19th and 20th, where we'll get the minutes and further insight towards the bank's deliberations in September, including whether they contemplated a hike and how they are balanced for softer growth with more persistent inflation pressures. So that's with the Bank of Canada. We've got also the Bank of England meeting on the 21st, and before then, on the 20th, we'll have CPI inflation for the UK. So pretty busy, as you can see. On the 22nd, we've got, excuse me, European flash PMIs, German manufacturing and UK services. So more stuff there for the UK on the 22nd. We've got the Bank of Japan policy meeting, and it just rolls on. We've got the Reserve Bank of Australian minutes. So the Bank of Japan is on the 22nd. The RBA minutes are coming out on the 19th, and we'll also see whether the People's Bank of China are going to hike rates again in the loan prime rates on the 20th. So a jam-packed week ahead. So look to your calendar, take note of when those events are coming out, and be wary of those as risks for your trading. Now, let's just start with the US dollar then, and we're going to go all the way out to, well, we're on the weekly chart here. I was going to say we're going to go to the weekly chart. So we're on the weekly chart here. So strong rally, we've broken structure, and the bias is bearish overall, but let me see here. So we've come up, broken resistance. We're up into higher resistance levels. So whether or not we can continue with that rally, we've actually printed a W formation. So we can put that in the W formation category on our watch list. And a W formation, what we're looking for is a pullback into the neckline. So it would be reasonable to expect a pullback from a resistance area back into the neckline. So I'll mark that as red for resistance. So we're starting off there with the weekly chart, just building a bias um, from the higher time frames, and we'll work our way in. So we've got the W formation here. We've got the tip of that W formation up here as potential support. But with these W formations, we're looking for a move, a deep correction, especially after 1, 2, 3, 4, 5, 6, 7, something like 10 weeks of gains. All right. So There are definite prospects of a squeeze, a long squeeze for the week ahead. That's not to say that, of course, this can't continue. I mean, absolutely, of course, it can. You've got the central bank divergent themes playing out. We got a dovish hike from the ECB last week, so the fundamental bias is probably tilted to the upside still, with the Fed expected to potentially to raise rates again at some point this year, whereas the ECB are signaling that they will not. So that's the weekly outlet, and we'll stick this in the W formations section over here, and I'll do that with a different. Okay, I'll do that with this one here. In fact, I'll just move this down. So again, like I said, for those that don't want to go through all of this, just skip to the end of the video, and I'll do a sum up of what we're looking at for the day ahead. All right, so that's the weekly chart. This is now going to be the daily chart. So we've got an impulse correction, impulse. That was a strong impulse. Prospects of a continuation, given how strong that impulse was. So pullback continuation perhaps on the daily chart. So measuring the Fibonacci just to see if we've got any confluences with prior resistance that meets the 38.2, the 50%, the 61.8. I mean, all of these are prospects for the day ahead. We have potential support at that high on the daily chart. So this was Wednesday's high. So we've got longs in the market. We're expecting a long squeeze. So back into this area of potential demand. We've got a support area over here. Okay, so that's Friday's low. All right, so as you can see, we're sort of moving into this cluster of Fibonacci's that align with structures. So we've got the 50% mean reversion coming in at 104.50. So anything above there, I would say there is risk for a continuation into the 104.50s. And if we get that, then I'll be looking for I'll be starting to look for a deceleration as soon as we come into prior resistance. Did I already mark that off? I don't think I did, which is there. So looking for deceleration of the correction as we come in towards 104.70s, 60s, 50s. Okay, and then so from within here, a correction to the upside, or a continuation, I should say, a continuation of the bullish market. So correction, potential continuation. All right. So that's the daily chart and the 4-hour chart. Consolidative stuff really here. We can draw some equal lows-ish support. All right, so we've got a box that the price is trapped within pretty much. So we're looking for a break of this support in here. We could probably mark that off with a ray to see the level. So break of 104.83. For a continuation to the downside. Change of character in the market. So we're in bullish territory at the moment, but a break below, say 104.83, perhaps even down here would be a safer bet. So a break below 104.80 for a continuation to the downside. That's not to say once we've broken it, we can't come back up in to meet resistance again. So these lows here could act as a resistance level on a correction if it doesn't just continue to slide below that trap volume. But it may come back up in. Quite often it would. before the continuation to the downside. Right, so I don't think we need to go any deeper than that with the dollar. Um, we're looking for a downside continuation or a downside correction for the day ahead. Same scenario with yields. So on the daily chart, up in resistance on the 10-year. So prospects of some weakness coming through, which would fuel the downside in the US dollar. Same scenario for the twos. Downside potential, weakness in the dollar. In these twos, you can see here that we've already had this is the daily chart, we've had a strong move lower, breaking this support area. So we've had that strong move lower and we've come back in. That was the same scenario that I was talking about on the 4-hour chart in the dollar. So break of structure, move into the trap volume area. So this move up here was met with a downside impulse. So trapping volume up top, coming back up in before the move lower, potentially. Now, bear in mind, we are still on the front side of this micro trend, but that would be the target to get below this area here and a subsequent break of the trend line support. Right then, so moving over to dollar yen, we've got the Bank of Japan later on this week. Starting from the weekly chart. So the Bank of Japan, just a note on that, they're expected to leave policy unchanged. Probably not too eager to um, throw another curveball at the market following July's surprise yield curve control tweak. Instead, we're going to be looking at comments from the governor on the yen, given how high it's been. We actually had some recent verbal intervention and jawboning from the Ministry of Finance officials, given how weak the yen has been. As we continue to sort of bounce around this 105 level as resistance. So there we have the weekly chart there. Still front side. W formation. Well, it is a W formation, but we had this interrupting candle, that blue candle here. So that bearish candle. And we didn't manage to get any lower. So the W formation fulfilled some of its role, but only into the prior resistance. So perhaps that should be noted. Try and draw that again. W formation, pull back into resistance, and a continuation to the upside. So this is a key level on the weekly. I don't know how many of you would be too concerned about the weekly levels if you're day trading, but worth noting nonetheless. Right, we're in resistance pretty much. So are we going to see some strength out of the yen? So just clear that up so we can go down to the lower time frames and assess it from there. Daily chart. Um, Nothing really jumping out here. We've got support resistance, testing resistance. 1, 2, 3, 4, 5 days of higher closes, prospects of a squeeze into those longs at resistance. 4 hour chart. Impulse correction, prospects of a continuation perhaps before the rollover, or are we getting stuck at resistance and this is a false break to the upside for the day ahead that will be met with shorts perhaps. Nevertheless, this pumped on Friday and we got the beginnings of a dump, support in here. So we pumped up from there. Perhaps we're going to move back into the longs. We can go into the hourly chart for this one. Well, we've gapped lower, breaking, not quite breaking structure, but definitely testing it, carving out prospects of a downside continuation. So that was the area that has tested, found support there again, creeping up. We're not long away from the Tokyo Open, so it's just worth sitting back and let this play out and set us up for later in the day and see how we get on. But it was good to be up high in London and the US session for shorts. So pump and dump scenario. So I'm leaving that in the pump and dump section. So if we see continued upside pressure, then there'll be prospects of a sell-off. Um, all right. So what we're doing is here, we're looking for um, trigger days, and I'm looking to see how we close in comparison to last week. Sorry, how we've opened in comparison to last week. So Monday broke into what? Did we break the opening lows? Yeah, we did. So on Monday last week, we came down aggressively and took out the prior Monday's opening balance lows. And we started to dig into this rally here. So still we have territory below here to target, considering we've moved lower. So we're moving up into the sell-off. So perhaps the up move is done, and we're now biased for a deep move to the downside, perhaps testing last week's lows as support. Not to say that's going to happen anytime soon, but that could be the bias for the week ahead. So what we're looking for is Monday and Tuesday to be the high of the week, maybe Wednesday, and then encroaching lower, lower, and lower as we progress through the week. So maybe a false break to the upside and then a rollover from Monday and Tuesday. We'll see how we get on for the rest of the week. But for today, we're looking to see if this pumps up, and then we're looking for shorts. So yeah, so I think that makes sense. So move up, consolidation, drop. Whether that drop is going to be in New York, the US, we don't know yet. Or maybe both. Maybe we'll come up twice to come down. Right, looking at gold. Start with the weekly charts. We shorted gold on Friday, so well done for those that stuck with it. It was a grind to the downside, that only came in as far as only came in as far as I say only. That was a nice move below the 50% mark, the mean reversion of that bullish trend or impulse, explosive move, and we crept lower. Now, in a scenario like this, that creep to the downside, um, it's done little to match the momentum in the upside. So, with that creeping correction, it'll be a textbook sort of impulse correction continuation to the upside. And that would fit in with the weak dollar narrative that we've painted at the start of this week. So prospects for a move up in gold, perhaps. Um, so let's see how that pans out. There's still room for a continuation to the downside. I'm not saying that that's gonna play out like that exactly. It could well come lower. Certainly got an imbalance between here and there to fill. Perhaps it will. So that wick to those lows, that is a price imbalance on this time frame that the market may well come and fill, finding support, meeting demand, and moving up. So this will be on the watch list for a long opportunity, perhaps for London and New York. Maybe even Asia is going to take off. We don't know, but um, the bias would be to buy low. Right, just taking a break here for a sec. Be right back. And then let's go to the weekly chart. As I said, this would be a top-down analysis on all pairs. So we broke the bullish trend when we came down below this higher low before the higher high. So we broke that structure and we've been sort of bouncing around. So we've come down once, twice, three times here. That's a pretty strong bottom move up. Um, Correction, so impulse correction, prospects of a move up despite being in on the other side of that bullish trend. And then we can sort of draw a trend line resistance, which could be respected or it might be broken. So let's see. What we got last week, I'll go to a different chart so we can illustrate this without taking off those drawings. Last week, the end of last week, we've got this wick that could be filled on the downside, because if you bring that to a lower time frame, such as the 4 hour, you'll see that that's length for the price to come into. In that respect, we've got support in here. I don't know why that's done that. All right, so support in here, support in here. Depends. I mean, if we get below this candle here, then that would be temporarily bearish. So if we get that uh, move lower, however it's going to play out, but and that would be filling the wick on that daily candle that we just looked at. No, what was it? The weekly candle. Sorry. Uh, for a move, filling some of the wick. What's that all the way down here? Let's have a look. Right. Well, to fill the full wick, you would need to get through a significant amount of all of this potential demand. No, I'm biased bullish. So long as we can stay above 1912. This was the breakout area. That was the breakout. What was the breakout candle? That there. So 1919, we broke out of that bearish phase, flip bullish with a break of that structure over here. Strong impulse. So creeping trend for a continuation to the upside is what I'm favoring. Okay, leave that there. Right, NAS. Right then, we were looking for. This is my notes from Friday. So it was a seller from the get go in New York, and it was a continuation trade for the post consumer sentiment data, if I recall. So we were trying to catch a falling knife here, and it continued lower, which is fine. Right, let's do a top down on this one as well. So we've got that M formation. We've met the neckline of it. This is on the weekly chart. So we've met the weekly neckline of the M as potential resistance. Having said that, if we're going to get a risk on environment, then this is a impulse correction and prospects of a continuation to the upside. I mean, perhaps we're going to come in and test the highs again, retest these highs. Perhaps they'll act as resistance. I say that because, I mean, we've actually come down pretty aggressively to break structure over here. So that's more of a impulse correction. Wrong one. Impulse correction continuation to the downside scenario. But for the meantime, we've got this impulse correction prospects of a continuation to the upside. So mixed picture on the weekly chart, but it's just worth noting that we came up into resistance and broke structure on the downside as well. So perhaps we're topping out here to move lower. Right, daily chart, strong impulse from Friday, M formation being made. So maybe a continuation lower, or maybe just a move up into the neckline, assess it from there. Not really much to go on with this. This is the 4 hour chart now, so are we meeting support by the looks of things? Prospects of a bullish correction. I mean, maybe we've seen the low already and we're just going to pump up. If we do, then note we've got resistance that we've marked already, and over here as well. Draw that on a Fibonacci. This is the 4-hour chart. Up into a 50% mean reversion. So maybe we're coming up to short later in the week. Maybe looking to buy low on the day, dump and pump scenario. Right, moving to S&P, same scenario. We had day one, day two, day three sell-offs. So day one longs, day two, and we had longs in the market before we sold off aggressively. So are we now looking for a correction? Same scenario as the NAS that we looked at, really. And then the Dow. Prospects of support here. Longer term, weekly chart. M formation. Tested resistance. Maybe we're coming lower. So that weekly wick here could well be filled in for the week ahead. So impulse correction, still in corrective mode before the rollover to the downside, or roll off. Confused terminology. So impulse, staggered correction before the move lower. Perhaps. Right, so relatively bullish, I think, on the stocks for the day ahead. Moving to oil now. We've had 1, 2, 3 weeks here of breakouts to the upside. Three days of breakups to the upside as well. Closing pretty firm on Friday. So stepping back again to the weekly chart here, we've got the market that was closing firm up into resistance. Prospects of a pullback for the open. This is the trendline, dynamic trendline support. But it started to move away from the mean, really. So when it does that, you're looking for a pullback. So bullish, correction, continuation. We can measure that continuation. We're yet to come up into anything really significant in terms of measuring that correction on the Fibonacci scale. We've got the minus 272 up in 9160. So perhaps there is more upside to come before downside. It's a pretty strong correction. So plenty of fuel, longs in the money from all the way down here. Now we're getting a bit of a pullback in the open, but that's not to say that can't continue to the upside, especially if risk appetite picks up along with stocks and the dollar lower. So any pullback at this point could well be met with demand. Just to note, to highlight that. I mean, we came down into a 61.8 correction on that move. So there are prospects of a continuation to the upside, considering how deeply that has moved back. So the market has fulfilled its purpose, came into support, filling orders that were left behind after that rally, and perhaps it's biased to the upside. So looking to buy dips for the day ahead in oil. Um, Now, having said that, looking to buy dips in oil, I'd also be looking to fade rallies in and around up in here. So let's say we come down low and continue up, then I'll be looking to fade rallies. So it really depends on what happens over Asia and London and where we're set up for the US. If we're up high because we've already come low, then I'll be looking for the parabolic um, correction into the 3 sessions of rise in the US session to come lower. So long as we've come low, come up into targeted area, and then that will be a nice indication with that pointing towards a bearish correction. Moving over to the pound, Bank of England this week on a weekly basis. On a weekly basis, we are into support. Front side of the bearish trend. But are there prospects of a impulse correction and then downside continuation from a longer term outlook? Coming into the daily chart, broke structure over here, impulse. We've got a bit of a wonky M formation, but nonetheless, we could expect a correction up in towards the neckline. Up in here, just mark it off between there and use these lows. But all of this in here is the neckline of the M formation. So we can expect a bullish correction. We are within the demand territory, so it could happen off the bat, or it might take a bit longer to set up. Perhaps we'll need another day or two to the downside before we see that correction. But for now, we're biased that the correction will take place starting today over the next couple of days. As it stands, we've got a target towards the 61.8 as a deep target of that impulse to the downside at 120 in the 124.50s. And again, being front side correction, continuation to the downside, front side of the bearish trend. So any corrections could be met with supply for a downside continuation. Coming in on the 4-hour chart here, we're trying to move up. The line in the sand would be those lows. Break of those could be significant and give way to an upside continuation. That's there on the 4-hour chart. So are we going to come up and test this as a resistance line? We've only had one test so far. All right, and we're coming in on the closing price from Friday. Where was the closing price? Sorry, bear with me. Yeah, so the closing price was down here. We've already moved up above that. So the bias has been shown to the upside. Got that W formation in here, coming up in towards a resistance area. Perhaps we'll break through there, come back in and looking to buy low for a test of that broader bearish trend. And pulling back onto the daily chart again, that would align with the correction towards the 61.8 124.50s over the course of the next few days. If not today, if not Tuesday, if not Tuesday, Wednesday, Thursday. Monday, Tuesday, Wednesday, sorry. Monday, Tuesday, Wednesday. Let's see. All right, so we had the dump. Now we're looking for the pump. And on Friday, we got that dump. So we're still looking for the pump. So ideally, we've got a W formation here on the hourly chart. So what we're looking for is a pullback into the neckline, acting as support around Friday's closing price for a move up. So buy low on the day. It would be the outlook at the moment. Moving to the Aussie, we've already done the US dollar. How are we looking on the Aussie? On the 1 hour chart, let's go out to top down analysis. So the weekly chart. Well, it's the hourly chart. Right. So M formation. So that's why we've got it in the M formation section. M formation. Prospects of a move up into the neckline if we can break this resistance area. Okay, so old lows, new resistance. Fibonacci tool on this correction up into the 50% mean reversion around 66.40. So between the, what is that? Between, so 66 and 66.50, call it, as the neckline. Right then, and let's go to the Canadian dollar on a weekly chart. That's the, what is that? Is it the weekly? So that is the weekly chart. So weekly W formation. Prospects of a move lower into potential support area, the neckline for a longer term outlook. We're currently at support near term. We've come in quite aggressively into this support area. Okay, so that is the support area. Moving to the daily chart then, we've got an M formation here. So looking for a move up into the neckline of the M formation. So conflicting messages here on the weekly and daily at the moment. But we have had a drop, 1, 2, 3, 4, 5-ish days of drop. Perhaps it's time for a short squeeze, which is looking like Friday was the start of it. And perhaps Monday will be the continuation. So now on the, well, let's look at that daily chart for a second. Yeah, okay, so we can pull a Fibonacci on that. 135.70. That's the 38.2 target. Looking like accumulation here, break of structure on that candle, pull back into the origin of the impulse. So this is acting as support in here. So long as we can stay above this area, we're looking for longs. If we fail on the upside at this point and then come down into here, then there'll be prospects of a downside continuation.